Oh, I love the smell of profit in the morning. Now, I don't drink coffee, but today we're going to talk about coffee because Starbucks had a drop from nearly $62 a share in late January to around $50 a share today. And that has left Starbucks with its lowest price to earnings multiple and its highest yield in years. Starbucks profit growth has slowed. Same store sales increases are meager. Did that stock decline of more than 20% make up for those disappointments? Well, let's take a look. So this is a real quick look at the chart of Starbucks going back just several months here into January, and you can see the peak was at 61.94, and the chart shows that its bottom was around 48.85, and today I believe we closed at just over $50 a share. But as the chart shows here, this is the lowest price since 2015. So is that a good price? Is that a good deal? Is that a good value? Well, let's get more into it. And this article comes from thestreet.com, and I'll just read through you here what the article says, and then we'll go check out our charts at the very end here. And showing here in this chart, the data reflects the already reduced revised earnings per share estimates for 2018 and 2019. And Starbucks average PE since about 2010 has been 26.5 times. A typical yield over those same 8 years ran about 1.4%. And in the chart here, you can see the three red stars here, here, and here. Hopefully it's not too small for you. You can see these three red stars, and those three should have sold moments showed that Starbucks can command multiples of about 31 times to 41 times when the mood is bright. It doesn't seem far-fetched to think Starbucks ultimately can bounce back to at least a 23 times multiple sometime between now and the end of 2019. And that assumption, plus modest earnings growth over the next coming 18 months, would support a December 31st, 2019 target price of about $59. And achieving that price would translate in a total return of about 25%. So the goal is far from an upper limit. Starbucks topped out at between $61 and $64 a share during each of the 4 years from 2015 through 2018 year to date on lower earnings per share and a skimpier dividend rate that is lower than what it is today. And the recent dividend increase has Starbucks paying a generous 2.95% current yield based on its mid-year close of about 48.85. So that's more than twice the stock's historical yield. And it's got this table has a lot more information, so go ahead and pause it if you want. But let's continue. And as this chart here shows from the independent research firm Morningstar, who is more bullish on Starbucks than the author from thestreet.com is, and Morningstar rates Starbucks as a 4-star buy, and that's 4 out of 5 stars, while putting present day fair value at about $64 per share. And Morningstar also calls the company's management exemplary. However, the CEO just recently stepped down because he may run for president in 2020, and that's Schultz is the CEO. So we'll see how well he does there. And if you believe Morningstar's projections, Starbucks could rally more than 30% within a year, plus reward investors with any dividends paid along the way. And this is the 20-year monthly chart on Starbucks, and the symbol is SBUX. And for disclosure purposes, I do not own any Starbucks at this time. However, I did look at Starbucks way back here, and it was in the 2008-2000 time frame. I did not buy it, but it was at this 2000, 2008, 2009 time frame when it looked very attractive. And I've visited Starbucks now and then throughout this time period. Never did buy in, but I would have to say that based on my charts here, and we'll go through the oscillators, that I tend to agree with the author from thestreet.com. Starbucks probably is a good candidate at this time. It did drop off the cliff here in the last few months or so. It traded sideways for a few years within that range there, and then finally broke below, and it broke below both the 20 and the 50 EMA. So let's move on down here into the MACD, and we see that the MACD has not visited that zero line since way back here in 2010, and of course it bottomed out here in 2009. That would have been a great buy. These probably would have been okay, but to me they had a little bit more risk in them, and I think this level here coming down to the zero line, a lot of this risk has been wrung out in the last, say, a couple of years since the peak here in late 2015, early 2016. Moving down into the histogram, we see that things are improving. It slightly higher lows here to the price rate of change. We did come way back down here to this level recently, but that's somewhat consistent to what it did here 2008 and 2009. So a lot of that risk again is being wrung out here. Relative strength is still pretty weak, but it looks like we have a bounce here. Now the trend is still downward, so it might not be time to jump into Starbucks yet. Those are supposed to be straight lines, but you get the idea. Moving here into stochastics. The stochastic does not actually show a bottom yet, but I would imagine that we've had a couple of points here that it made some attempts. So I think another attempt is coming here relatively soon, and the volume looks okay, and the Williams looks to be about the same as some of the other oscillators. Again, we haven't been into this level down here, which is the oversold territory since say 2016, and then all the way back to this time frame in here. So in my mind, it looks pretty encouraging. I like the price and I like the oscillators. Perhaps we have a little bit more time to go before an actual bottom, but we're not far from it. So, as usual, if you're interested in Starbucks, you need to conduct your own fundamental analysis and technical analysis. But from my opinion, we're getting close to a potential buy on Starbucks. So for today, that's ChewDog Charts. Thank you.